things that we're going to be doing when we evaluate any particular piece of property. The first thing that we use is a thing called the cap rate. And guys, in the program itself, there's a lot of great information on cap rate, how it works, how to work out a cap rate, how to compute a cap rate. So we're not going to spend a lot of time on that right now. Suffice it to say here that cap rate is in fact the capitalization of income. We take the amount of income that any property produces and we capitalize that to determine the value. We capitalize that at a predetermined rate that we have decided is acceptable as a rate of return for us. Your cap rate might be different than my cap rate. That's okay. The program itself, the Real Deal training program and our live event goes into a lot of detail on cap rate and how we actually work with it and why it's so important. But a cap rate is an easy way to look at the return on a property and determine what the value is to us based on that return. And that's what we use cap rate for. So obviously, if we're looking at cap rate and we're determining that the value of the property is something based on income, then income becomes an important factor for us as well. And when we start to talk about income, we're talking about a thing called net operating income. You're going to see the term NOI in a lot of the information, whether it's our information or anybody else's information when you're dealing in the commercial arena. And the term NOI stands for net operating income. And net operating income is a critical factor in determining value of a property. One of the greatest things about buying commercial real estate is what you're actually buying is an income stream. You're buying a piece of property that kicks off income, and you have to look at that income and say, for me to buy this income, it's worth paying X amount of dollars, whatever that is. That's your cap rate. And so when you say the property is worth X amount of dollars because it kicks off this much income, do you think it might be important to be sure that the income that somebody says it's kicking off is real? And obviously the answer to that is yes. So net operating income becomes a very critical factor in the overall concept of dealing with commercial property when we're evaluating it. And this is all done.